Mortgage Alliance.
That was pretty good. You guys should do that over. I think.
There's Nero over there. This is Paul Taylor. Paul's the CEO of MPC. Nero, our compliance director, used to work for Paul. Nero told me to tell him, "You're not the boss of me
anymore."
But Paul reminded me that Nero comes upstairs for coffee, so he better be.
I'm going to have to revoke your access.
We've got Joe Pinero, new director of MPC for Ontario, and our VP of Sales for the country. Just really glad to have both you guys. I have a lot of respect for you, Mr. Taylor, and what you're doing as far as MPC is concerned. And Joey, you know how much I love you, man.
Yeah,
so thanks for being here. We're going to discuss some of the things that are going on as far as the industry. We're going to discuss MPC and how MPC helps us as brokers and helps the whole industry. But before we start talking about that, we got some updates. Holiday Gala was phenomenal. It was a really great night, benefiting the Canadian Cancer Society, more specifically the Mortgage Alliance Fund for Innovation in Cancer Research. Last year, we've raised $150,000. We gave Canadian Cancer Society the great big check last night. It's just a really great event. It was great to see everybody. A lot of brokers there. Some people flew in from different parts of the country to be there, so it was a really, really nice event. I want to thank everyone for participating. Really look forward to doing this thing again next year, and really looking forward to how in 2019 we as an organization are going to continue to give back to the community. And I think we're going to start working on that as soon as the kickoffs and things like that are done in January. Caitlin and Yasmin want me to tell you guys. We communicate via emails. We communicate via the Brokers app. We're also starting to communicate using Facebook, because that's where everybody is, Facebook and Instagram and all those other things. So we started a page called Mortgage Alliance Innovators. And what you need to do, go to your Facebook, make sure you like and follow Mortgage Alliance Innovators. Everybody needs to do it. This is the page that we're going to keep putting all the news and all the events. So if you want to see what's happening at Mortgage Alliance, you want to see what's happening with brokers across the country, you want to see what's happening as far as events, you want to see what's going on in the industry, this is going to be a place to go. Caitlin tells me in like 2 or 3 weeks we've got 600, 700 followers on the page, so it seems to be something that the brokers really like, and we're going to start focusing more and more on things like that, because if we're there anyway, it's the same thing I tell brokers about consumers. Consumers evolve over time, and part of our responsibility as business owners, as entrepreneurs, is to be where customers are. So don't think your business can stay the way it is today. Your business has to evolve so you can go where customers are, and also deliver your service in the way customers want it delivered. And believe me, it's changed a lot in the past 20 years.
Yeah, no kidding.
Right?
Yeah.
Mm-hmm. If there's anything you guys feel that you really want to talk about, don't be shy. I know Joe loves to talk.
I talk too much up here.
Actually, he was really good. His opening last night when he did the presentation was very meaningful.
It was
I think everybody really appreciated it.
Yeah, you were actually quite succinct.
Succinct? I don't even know what that means.
Terse by Joe Stevens.
Yes, that's true. That's true. Okay, save the date. January 17th, Toronto is going to be the kickoff. I think last year we had 500 or 600 brokers there. It's a really big event. All the lenders and suppliers are going to be there. So if there's one day per year that you schedule to find out what's going on in the business, in Ontario it's January 17th, in Alberta it's January 27th, and in BC it's January 24th. Mark those days down. You really have to attend these events. All lenders, all our partners, all the associations are there with us. Also, we do the awards. We do the awards, we do the trip winners, all the recognition for last year. Mark your calendar, make sure you're there. And I think Joe's going to be sending everybody an email a little bit later on, either today or later this week or something.
Yeah, I think probably shortly after the meeting as well. Like it's a really tight race for a lot of the awards and the lender awards and so forth. And those that, are certain statuses, the leads president, so you really want to maintain that status. So you got to get your deals in. Okay, you don't want to lose a trip because of one or two deals. So make sure you get them in. We pretty much have like 2 solid weeks of this month left before the end of the year. So, and I've talked to a lot of people, and they said, yeah, this is the week I got to get all my deals in and start catching up on stuff. So this is a great week to do it. So make sure you get your deals in. You hate not to meet that level because of one deal.
Don't get bumped out.
Don't get bumped out because of one deal. Okay, so send those deals in. Okay.
And next year, beginning of April, I think Cabo San Lucas is where we're going to be. A beautiful spot. And really looking forward to seeing it. I think we're going to have 100 plus brokers as usual.
Yeah, it's going to be wonderful.
Great.
Wonderful.
This is survey time. You guys do surveys all the time to make sure that you're serving your constituents, right?
Yep.
And for us, we do annually. We do a survey of all our brokers, and we're really trying to find 2 things. We're trying to find out if we're doing a good job. Okay? But we're trying to find out if we're doing a good job in the areas that are important to you. So we don't just want to be doing a good job. We want to be doing a good job in areas that are significant to our brokers. And frankly, if you guys, after the course of business over a number of years, if you guys think something's not really that important anymore, we don't really focus on it as much as we focus on the things that you think are important. So make sure you fill in the survey. When's the survey open till?
End of today.
End of today. I know you got a lot of responses, but we want feedback from as many people as we possibly can. There's also a new section that we added to the survey that I really want everybody to pay attention to. We've got some special awards. We've got the Pierre Fournier Award, we've got the Broker of the Year Award, we've got the Ambassador Award, and a couple others. And there's a description for each one. And each one of these awards comes with like a lot of recognition, a lot of prestige because of the people that have won the award in the past, and also one of the trips goes with the award. So if there's anybody that within our network that you feel is deserving, make sure you take the time to nominate them on the survey. Okay, it's very, very important for us. Deadline's today. Make sure you fill it in. We've got a great home and auto insurance program that we've rolled out for our customers. Now we got a family discount that's going to be available to our brokers. As you know, I think it's a $70 referral for home insurance. Every single person you give a mortgage to needs home insurance. So they might as well get it from you. It's a great program, great broker, and it's good pricing. You also earn $70 if they do home and auto. I think it's $140 in it. But as a broker, you they need this stuff. If you can offer it to them, you should just offer it to them. Make it part of your business. Make it part of your business. And for us, as part of the Mac family, 15% discount to everybody, so make sure you call in, call Unitas, or just email sales at unitusinsurance.com, or visit the Innovators page. That's where you go for anything. So make sure you do that. Yasmin wants me to tell you about the Mac Studio. A lot of brokers have gone on the Studio. If you haven't got on the Studio, the last thing that's updated on there right now is all sorts of holiday greetings, birthday cards, all sorts of information about the $100,000 sweepstakes. Now, everybody should know that everybody you funded a deal with last year is eligible to win $100,000 in the Minimize Your Mortgage sweepstakes. This is our 11th year. We've given away more than $1 million so far, and it's going to be another $100,000 to a lucky Mortgage Alliance Brokers customer. For us, it's a really exciting time, and believe me, if somebody wins,
it's a big deal.
It's a big deal.
Yeah.
Like $100,000 is a lot of money, and we've had some really, really nice.
It always seems to be really nice
about the
people.
winners
We
here.
must deal with really nice people,
I
because
know.
every time somebody
I know.
wins, it's always a wonderful story. Really nice people, and I love like visiting around the offices. And we've got these nice posters that you see around the offices. So if you want to get those posters and put them in your office, they're beautiful and it adds credibility. And it's not that Mortgage Alliance is giving away $100,000. It's you are. If somebody does a mortgage with you, they have a chance of winning $100,000. And it's much better, like odds of winning that than it is any other lottery that's out there. That's credibility. It's great collateral material. So make sure you use it. And I find those that use it a lot. So like be one of those people and just have it there and have people ask about it.
I think it's a great program. And we started doing this, as I said, 10 years ago or 11 years ago. And the reason that we decided on $100,000, $100,000 was a lot of money at the time, is the fact that we wanted to be significant so that people would look at a brokerage house and say, well, you know what, these guys must be fairly big and substantial, because $100,000 back then, I mean, that was bank money. That wasn't broker money 11, 12 years ago. And it's just grown since then. Great winners, great marketing program, and let's make sure that 2019 it's going to be just as successful.
It's a great year to promote it.
All right, the reason we're here today is to talk to Mr. Taylor. He's sitting in the middle.
Hot seat.
I just want to tell you, he was like a little uncomfortable with that because he knows both Joe and I. And I don't really...
It's easier to escape from the edge.
You're used to the hot seat. If there's somebody who's used to the hot seat, it's you.
Oh, yeah. Paul is a very, very cool, very thoughtful person. I think your personality is great for the job. It really is. It really is.
Thank you.
Nothing razzles you.
So I want to start by the fact that supporting the association, supporting a national association, has been very, very important for our organization. We like to support provincial associations, but we support provincial associations with the understanding that everybody's working in the same direction. If people are working in opposite directions, frankly, we're not very supportive. We love provincial associations, but we think one national voice is the best thing that we can do as an organization to make sure that the government committees, the regulators, really hear and understand who we are as an organization. Paul, I think a lot of brokers don't really understand what MPC does. What's the most important thing? What's the goal? What's the mission of the association?
So thanks very much indeed, as always, for the opportunity to be here to address the group of folks here. I have a tremendous amount of respect for both of these gentlemen as well. Joking aside, I'm actually really happy to have Joe on the board of directors. We've already had one meeting with you present. I'm really looking forward to the upcoming
thank you so much.
2 or 3 years. The association is effectively the coming together of the industry. So as the national voice, we have about 10,000 mortgage brokers across the country that belong alongside lenders and mortgage insurers and some industry service providers even. So whenever it comes to any messaging that's required to be delivered to any level of government, whether it be the regulator, whether it be the Federal Ministry of Finance, we're able to approach any of the concerns from every perspective within the mortgage broker origination channel. So we have really good insight to all of the pain points that have been caused by the last round of regulatory changes, for example, both at the insurer level, government and private, the lenders themselves. We can see how the movement of business and money flowing is changing as lending is becoming more restrictive for certain folks, and the activities of the brokers themselves. There's regional communities that have been hit harder than others. Anybody that wasn't already in an economic environment that was firing on all cylinders to begin with has really seen real estate transactions slow down too. So we've got great perspective with our collective voice to be able to explain what some of the problems about these changes have created, shall we say. The long-range plan for the association gets reviewed every 3 years. The last plan had 3 real primary objectives. The first was to strengthen and enhance our government relations activity at all levels. The second was to promote the overall consumer awareness of the value and benefit of using a mortgage broker. And the third, a little self-servingly, was to enhance our own membership base and membership engagement. We deliberately didn't order those. So we didn't say government relations was 1 and public relations was 2. We said we're going to continue with all 3 as a priority and we'll adapt as necessary as the environment changes. Well, we put that plan together at the beginning of 2016. The insured changes were made public towards the end of 2016, and frankly, government relations has kind of been the primary focus of the association ever since. On the heels of B20 and minimum stress test and minimum capital test changes, the environment is a whole lot different now than it was then, as you guys know. So I think we've done a tremendous amount of work actually in the last couple of years, quite specifically trying to bring the messages to government about the issues that they're creating. Another thing that's interesting about our community is we tend to be the go-to source for first-time buyers or the young middle-class Canadians. A lot of would-be homeowners now, unfortunately, folks that are the aspiring middle class that previously would have qualified that don't any longer. So we have an awful lot of information that shows that the dip in real estate transactions in a lot of areas across the country is really quite specifically the exclusion of the people at the bottom end of that ladder. And so we're able to make pretty strong economic arguments about there's definitely been some concern with rising interest rates that the indebtedness of Canadians will cause them a problem or that they're not able to meet their payments. That's one concern, and it's very specifically really about the long-term health of the financial system. Not so much about the long-term health of the individual Canadian voters, though. And when the changes were brought in place, definitely the banking system is more secure now. When you read headlines about a reduction in overall debt-to-income levels, which is certainly something that they wanted, but mortgage originations are down. The average loan-to-value has come down because people have just seen a significant reduction in borrowing power, and in a lot of markets, first-time buyers are just excluded. There's knock-on effects to that too. Rental vacancy rates are at historic lows in a lot of areas across the country, so not only are houses becoming less accessible, rents are also becoming more unaffordable, and we're creating a bit of a sort of a self-fulfilling prophecy here of there being a missing middle chunk of homes available for people that most desperately need it. So we've been arguing for some policy alleviation for the last little while, because the economic change and challenges there, I should say, are created by policy, not by economic forces. The government needs to understand that they're responsible ultimately for the environment that they've created here. If you've heard us speak in the past, or if you've actually been a volunteer on any of our committees, which many of you will have been, really important to state, an association is made up of its own members. It's not me, and it's not Joe as a member of our board, but it is the volunteer effort that he brings forward, as well as the time that everybody else contributes.
I love the way you're ducking responsibility. They're blaming us.
You know what? We all fail together. We all win together too, though. We do a tremendous job of making sure that we're collaborating, but it is through the volunteer efforts of people within our community that we really do have the strongest voice. So we've had 2 or 3 what we call awareness days. You probably traditionally would have called these things lobby days, but that has a bit of a not great connotation. Yeah. So we call them awareness days now, and a whole number of our volunteer members will go to Parliament Hill. We'll have speaking points about the pain points that the stress tests and other insured eligibility changes are having on local communities and the would-be customers of many of the mortgage brokers across the country. When the brokers are delivering that message, it actually has a whole lot more impact than when I do, right? Especially outside of Toronto and Ottawa, around BC, Alberta, Atlantic Canada, the MPs and MLAs there don't care about a guy in a suit from Toronto coming to tell them about their local problems. What they really care about are people in local ridings talking about problems in their local ridings. So we really do owe a debt of gratitude to everybody that's giving their time to the association. And to Michael's point right at the beginning, thank you very much indeed for your very long-standing support. Both you gents are past chairs of the association. But it's a recognition of the fact that it's the community as a whole that needs to take our messages to government when we've got these challenges. Because if we're not combined and we're not unified in our messages, and everybody is taking a different set of requests to their MPs, the government actually has no idea of what the right course of action is to address the problem. So we really are doing as much as we can to coordinate messaging across the industry about stress test at 2% is far too high, that needs to be reduced. In early days, we were suggesting 75 basis points probably makes much more sense. And we arrived at that number through our chief economist Will Dunning's calculations. It's essentially a present value calculation of 2 points 5 years out. When you consider the increase in your income, the additional equity you'll have in your home, if you can weather 0.75% today, you can weather 2% in 5 years. Interest rates have gone up a point and a quarter already. There's a little bit of a slowing, but there still seems to be an expectation of some more. So we're going to change that messaging a little bit, I think. We're smarter now to just be asking for a floor. like a qualification rate minimum. So let's say 5% for the sake of argument. If the natural market rate for a contract goes above 5%, you should qualify at the contract rate. And if the contract rate falls below 5% because the economy needs a bit of stimulus, people still need to qualify at that minimum 5%. It'll be a whole lot less painful to implement a stress test if rates are coming down. It's still more prudent than no stress test. 5 points is still about 1.5 points above today's contract 5-year fixed number. But it does provide some relief. And as rates increase, we're not doubling down on the sort of economic pressure that people at the bottom end of that ladder are going to feel. 30-year amortizations are probably something that should be reintroduced into insured mortgages as well. That's really quite a specifically targeted mechanism to assist the people at the bottom. And that's really, I think, what the social mechanism of an insured mortgage program is supposed to be doing. We have much more difficulty with the argument about refinances in portfolio insurance, which I know has been a big structural issue for us. Government has a really hard time philosophically, though, with the idea that they would be providing a backstop to people taking equity out of homes. They don't have that argument about assisting first-time buyers getting on to the ladder, though. So we can hopefully argue.
One of the things that we thought about portfolio insurance a few years ago was the fact that the FIs were using portfolio insurance on a lot of refinances and basically eating it up so that it wasn't available for some of the monolines and things like that.
They would. A lot of the FIs I've talked to actually would say it's the other way around.
Yeah, of course.
Well, because the eligibility to take part in the portfolio program was sort of shared amongst the industry at large, I think they would suggest that they've actually had a reduced share of that, or they did anyway prior to some of the changes. Well, it depends who you listen to.
But let me ask you a question. As you said, 3 priorities. You've spent most of the time on the first priority, which is GRO, the past 3 years almost, right?
Yeah.
What successes have we had in the past 3 years?
So that's a really good question. In the very early days, actually the association's name changed just before I took over, so we had a bit of a rebranding exercise to go through and make sure the government were aware. We also at the time had a brand new government that had the largest contingent of brand new MPs that the country had ever seen, and so it would have always been an education effort required for the new people in the seats there to understand who within what industries is actually supposed to be communicating a message. So we've actually spent quite a lot of money and made a lot of volunteer time effort towards just ensuring that the government understands who Mortgage Professionals Canada are, who our members are, who we represent, and what messaging is. So we've definitely done that. We've meetings with the Federal Ministry of Finance. Bill Morneau definitely knows me by first name basis. I was in Ottawa for the CMHC housing conference a couple of weeks ago. Minister Morneau was hosting a breakfast on the Thursday. It was the morning after his fall economic statement. And then I saw him at the airport because we were both catching a plane back to Toronto the Thursday evening. So I managed to get 5 or 10 minutes worth of informal talk time with him there, just because I'm a sort of recognizable brand and he knows that we've got some challenges in our industry. So
he said, "You're the guy that's sitting outside my house." No.
Actually, coincidentally, I live in his riding. He's downtown Central, so I live in a condo sort of right in the core. So I always used to think, push comes to shove, I could just go sit in his riding office and he takes a meeting. But I mean, he's afforded us a couple of discussions directly. We meet with his office on a quarterly basis anyway. We also meet with policy makers. We've met with OSFI. I've spoken to Jeremy Rudin a couple of times, Bank of Canada, Evan Siddle, CMHC at our conference, and we have standing meetings with all of these folks to make sure that we're involved in conversations. And even if they are in the immediate short run loath to make any changes, because in many instances they do feel like they've got the right answer, we are definitely there as a respected voice now providing input and trying to bring the stories forward about the pain that your customers are feeling because there's just less accessibility to funding in the market. The economic evolution of the marketplace as well is really easy to point sort of a correlation back to the changes. So the growth in the private markets is occurring because there's a significant reduction in lending capability at the traditional FIs because the boxes or the goalposts have been brought in. But because of that...
How's the government feeling about that? Have they identified it as an issue as far as they're concerned, or no?
Interestingly, OSFI understood that private lending was going to increase when B20 was introduced. I mean, it made no show of real concern about that there. I think they're worried is the wrong word. They know they don't have an awful lot of line of sight into the data about what's happening there.
Yeah.
And so you may start to see some clever types of construction where they're trying to find ways to get more info. At the association, actually, I've been speaking with the Private Capital Markets Association as well as on MICA, BC MIC managers. I would like to put together a bit of a data repository at Mortgage Professionals Canada that they could feed them information into, and we could sort of anonymously report on just a couple of basic trending line items for them. I think if we don't provide something, government generally tells you what the answer is going to be, and oftentimes we can find a much easier solution if we do it ourselves than if we just wait to be sort of dictated to. So the marketplace, it seems, has gone from about 3% to 8% on aggregate in the last 12 months, and that shouldn't be a surprise. When the marketplace is being told at the federally regulated level that it needs to be more constrained and reduce its risk appetite, anybody who's got any private money is going to see an opportunity there to take advantage of this arena that's just been opened. And the growth in that actually is almost an indication of the overshooting of just how tight lending regulations are now, because there's no shortage of appetite to get into the rest of the space when you consider things like overall arrears rates in Canada being at historic lows, our unemployment numbers are at historic lows. There's no crisis for which these solutions to be required. So, I mean, the growth in that trajectory should be really obvious to everybody.
And of course, there's that long-term, or actually probably shorter-term risk associated with a lot of people being forced into that private space that 2 years ago would have fallen into the A space.
Right.
So, of course, the government's concerned about over-indebtedness, and this really doesn't serve the purpose by having a large segment or having our private business go from 3 to 8%.
Right.
And I think, like as you mentioned earlier, when it comes to government, everything in the last 3 years, and we'll continue on, is about educating the MPs of how our business works and how impactful it is to the Canadian economy and the Canadian mortgage consumer. Like we've said before, that's not about our industry, it's about the impact our industry has on the Canadian economy is really the message that we have to give, and how we are a positive contributor to the economy, and especially to first-time home buyers. We know, what is the number? I think it's like 52% of first-time home buyers now use the services of a mortgage.
56.
Yeah. So, I mean, that's a great message to give to the government and MPs. You really should be listening to what we say, because we have good information when it comes to first-time home buyers and the impact these changes have had.
So, I mean, interesting, they have all of the information as well. There's a Bank of Canada report, it's a little bit dated now, but if you look at I think June of 2017, they ran an interesting historical review. And as interest rates were coming down, of course, debt was going up. It's a pretty standard macroeconomics graph, actually. They're always like this. But the really interesting common theme is the carrying cost of indebted levels has been solid at about 14% of disposable income almost forever. So even though people were taking on more debt, everybody manages their budget on a cash flow basis, right? You think about, what's my monthly payment going to be? I can manage that debt load easily enough. So people are focused on the wrong sound bites, if you will. And 167%, 172% debt to income ratio was actually the alarmist number. The interest carrying cost is the real question there. 172% at a 10% interest rate? Yeah, that's crazy. At a 2% interest rate? It's no big deal at all. And so forcing people actually into higher interest rates to manage their debt load in an interest rate environment is going to create more defaults than it's going to prevent.
Absolutely. Yeah.
So there's definitely needs to be a view on that.
So what are you going to do about it?
Well, so the government relations activity is almost operationalized now. So what am I? I'm going to deflect again. What are we going to do about it? We have an ongoing standing appointment at Ministry of Finance. I've got a really strong personal relationship now with Evan Siddle and some others at CMHC. So we just need to do our best to make sure that they begin to hear our concerns. The marketplace, everybody watched it last year. Transactions just sort of went like that. and everybody kept waiting for it to come back. And a lot of economists seem to think pent-up demand is going to catch up with, but pent-up demand I don't think is actually going to catch up with interest rate increases. We're just going to stall again, and if the marketplace has a spring next year like it had this year, like evidence is irrefutable. You're going to have to do something to soften policy to ensure we're not creating recessions by virtue of squeezing too hard. A couple of smart ways to spin messaging here. The overnight rate is currently 1.75%. Stress test is currently 2%. The Bank of Canada will tell you that the neutral rate is 3%. Right? So when the overnight rate is neither stimulative nor suppressive, the market should look after itself.
Sure.
Well, at 1.75 plus 2%, we're already really testing the marketplace at a suppressive or a dissuasionary bracket, and we shouldn't be. And as rates go up, that's only going to get worse. So the reason why we're sort of changing our messaging to have more of a kind of a flat, you must be this high to ride this ride kind of a stress test, is it's much less continuously punitive over time. It sets a minimum threshold so people don't get into trouble when money becomes too cheap, frankly, and interest rates are too low. But it doesn't break their legs when interest rates are already pretty high and they have to double down to qualify again. So that'll on go. There's a couple of other things. Our long-range plan is actually up for a refresh, so at the end of January, the board of directors will be away for a couple of days taking a look at that. We'll take a look at the current marketplace and figure out our priorities. My suspicion is raising consumer awareness about the value of a mortgage broker is probably going to remain as one of our priorities. We probably will end up just pouring more money towards that. I always get asked questions ahead of time for these types of things. What are the opportunities for mortgage brokers in the upcoming years? The regulatory environment's painful, no doubt. Now is absolutely the right time to be making hay if you're a mortgage broker. As qualification actually becomes more difficult and more complicated for people to understand, as a professional advisor, you are the only place people can go to get a straight answer. Anybody that is tied to an individual distribution model has no real understanding of this full environment of a marketplace. You guys need to be touting that like crazy. In any of your advertising, your differentiation is absolutely your ability to access multiple markets. That needs to be screamed from the rooftops. The fact that you have access to various lenders with different underwriting appetites also means you can accommodate people that they can't. It's a really good day. The marketplace as a whole might be shrinking. Your ability to penetrate, though, is expanding. So you'll do well if you remain focused, for sure. And if we emerge out of the other side of this with a little bit of regulatory easing, there's going to be a ton of first-time buyers suddenly who will requalify again. You'll have a great time middle of next year. So just stick with it, for sure.
Okay. As far as help, you said we're in this together. What would you like to see brokers? How would you like to see us help move the association forward and make it more, even more credible, a more
Meaningful.
meaningful voice in the regulatory community? Actually, you know what? I'm starting to get a bit disillusioned about the fact that the regulators will listen to us. They've got a job to do, and they manage to their job. I think for us to get anywhere, it's going to have to be the elected officials that
100%.
make the difference.
Very fair. I actually would think of it this way. OSFI is not concerned with what consumers' activity is. They're only really concerned with the overall health of the financial system in general. So any of the regulations that they make, the fact that they disqualify some folks, they're not thinking about it on an individual level. They're just thinking about the underwriting quality of a book.
Right.
CMHC also has a pretty unique purview, and I would suggest that their focus has probably shifted in the last little while, but they're much more closely aligned to the Federal Ministry of Finance than OSFI because of the fact that the government is backstopping the liability. And the IMF and the OECD in the last few years have actually become very sensitive to the size of the potential sovereign liability in the event that there's a market downturn. That actually was what threatened our AAA rating for a while, and to a degree probably had some influence on the reason why portfolio was taken away. But with portfolio being taken away and with reductions in first-time buyer eligibility, there's definitely been an overshooting there from our perspective. We've seen it. And we have been talking to MPs at all of our lobby days and Hill days. And we do that en masse. What can brokers do? You want to get involved. Like the association, your experience with the association is entirely in your control. We have chapters that meet regularly to discuss local problems. There's almost business community support within those. If you want to talk to your friendly competitor about how marketplace is happening there, so you've got an anecdotal benchmark, all of that can happen. If you want the opportunity to go and talk to your own MP, we can give you the scripting and the messaging to make sure that you're on point with everybody else. If you even want to give us a call and just debate the merits of the positions we've taken, I am happy to take that discussion on at any time. We didn't pull these things out of the air. We have very, very smart folks sitting around our board table, past and present, and past, who have assisted us with all of these things. Lenders, insurers as well. So we have an awful lot of community events that take place. You know we do symposiums and we have the national, but we also do like regional meetings, and they're all driven by volunteers. We get phone calls at the office that say, I'm in Windsor, we really need an insurance 101. Okay, well, we'll put someone in an NPC shirt and we'll send them down there to give you a bit of a brush up. So you almost control how much value we're able to bring to you. Now, on a really simple what's in it for me, there's a bunch of other things we've got. The licensing, relicensing, the stuff we do across the country. We're investing in trying to grow channels across the country. We have a brand new licensing course in Quebec. We're actually tremendously excited about that. It took us a year to develop, but it's 50% cheaper than the previous licensee street rate. It's 50% faster to complete. And with the broker channel in Quebec being really quite significantly underrepresented from a footprint basis compared to everyone else in the country, it's an immediate way to help us grow the channel and footprint there. We're always working as collaboratively as we can. We've got a partnership with AMBER in Alberta, Provincial Association.
Very excited about that. I think that's
wonderful.
Personally, I think that's the direction that we need to go with all the provincial associations.
100% agree.
And if they don't play, we're going to have to find a way to work it out so that at the end of the day it ends up strategically aligned with the entire industry.
I had the chance to attend AGM in Calgary last week, and they were very, very excited about the opportunity of finally coming together. So it's great.
I think it's tremendous. There's operating efficiencies for both of us. And like in Alberta now, we're not duplicating efforts when we're trying to coordinate with RECA and with the Fed. We know their point locally and we're point that way. We're always involved in each other's discussions, but the actual work of creating the submission is not done twice. So there's definitely efficiencies in. And anything that we're not spending money on in terms of administration like that, we can redirect to government relations or to public relations and ad campaigns and things.
All right. I got to thank Paul for being here today. We're a little bit past time, but we've got a lot of valuable things to talk about. We're probably going to have him back maybe sometime beginning of next year because I think it's a really important issue, and I can see the progression that we've taken as far as an association is concerned. The message that I think that we really want to communicate to everybody is the fact that you need to get involved. And you need to get involved on a local level to support the national cause. And again, my feeling is if we can reach the elected officials with the fact that homeowners or prospective homeowners in their local marketplaces have been disadvantaged, and you need to pay attention to it. I think we can get a lot done. So thanks very much. I really appreciate you being here. Thank you very much.
Thanks for the opportunity, guys.
Yeah, thanks, Paul.
This Wednesday, we've got Merrick's and the most professional underwriters in the country from the Hub. Part of the show here. If you want to find out what's going on in the business, you want to learn how to underwrite deals, you want to learn about Merrick's, make sure you watch. This is Wednesday, this coming Wednesday, 1:30 Eastern Time. Don't miss it. Every one of your 218 customers are entered into the draw. Now's the time to marketing campaign to all your folks. I think Yasmin's got templates set up in Boss for you to use. Communications are going to be going out. Make sure you like and follow the Mortgage Alliance Innovators Facebook page. And make sure you answer the survey. It's very, very important to us to hear from you. Save the dates for the kickoffs. Remember, there's lenders, there's brokers.
Get your deals in. And get your deals in. Get your deals in. Sorry.
Doing sales?
Yes.
Get your deals in.
There's lenders, there's brokers, there's Mortgage Alliance. Mortgage Alliance is different, and we're different. Well, a lot of the reason that we're different is because we got folks like this taking care of us with the government and the association. Thanks very much.